Have you ever wondered why some people make massive profits in crypto while others lose everything? The truth is, it's not about luck, it's about strategy. In today's video, we'll break down the top crypto investment strategies that can help you grow your portfolio, manage risk, and invest smartly in this fast-changing market. So whether you're a beginner just entering the crypto space or someone looking to refine your game, stick around till the end. Let's dive in. 1. The HODL strategy, buy and hold. The HODL strategy is the simplest and often the most rewarding for long-term investors. The idea is straightforward: buy a strong cryptocurrency and hold it, regardless of short-term price swings. Coins like Bitcoin and Ethereum have proven their strength over time. Despite massive volatility, both have shown long-term growth. When to use it: when you believe in a project's long-term potential. When you want to avoid emotional trading, use dollar cost averaging (DCA), investing a fixed amount every week or month. This helps you avoid buying at the top and reduces the emotional stress of timing the market. 2. Swing trading, ride the market waves. Swing trading is ideal for those who like short to medium-term opportunities. Traders buy during market dips and sell when prices rise again, capturing swings in the market. It requires technical analysis skills, market awareness, and quick decision-making tools you'll need. Candlestick charts, RSI, and moving averages trading platforms like Binance Bybit or Coinbase Pro. Always set stop-loss orders to protect your funds from sharp downturns. 3. Staking and yield farming, earn passive income. If trading sounds too stressful, consider staking or yield farming. These strategies let you earn passive income on your crypto holdings. Staking: you lock your coins in a blockchain network to support its operations and earn rewards. For example, staking ETH or Cardano can generate annual returns of 4 to 8%. Yield farming: you lend your crypto assets on DeFi platforms like Aave or Uniswap and earn interest or tokens in return. Yield farming involves smart contract risks, so always choose reputable platforms. 4. Diversification: don't put all your coins in one wallet. Diversifying your portfolio is key to managing risk. Crypto markets are unpredictable, so spreading investments helps protect your capital. Here's how to diversify: by type. Hold a mix of large-cap coins like Bitcoin, Ethereum, and smaller altcoins. By sector, include projects from DeFi, gaming, AI, or Layer 2 scaling solutions. By geography, explore global exchanges and emerging blockchain ecosystems. Never invest more than you can afford to lose, and don't chase every new token that trends on social media. 5. Dollar cost averaging, DCA. We mentioned it briefly earlier, but it deserves its own spotlight. DCA means investing small amounts regularly instead of making one large purchase. Investing $100 every week in Bitcoin, regardless of its price. Over time, you buy more when the price is low and less when it's high, averaging your cost and minimizing emotional mistakes. It's one of the safest and most effective ways to build wealth steadily in crypto. 6. Fundamental analysis: invest in real value. Before you invest in any coin, research the fundamentals. Ask these questions: what problem does the project solve? Who are the founders and developers? Does it have real-world use cases and partnerships? How active is the community and development team? Ethereum grew strong because of its smart contract utility. Similarly, Solana gained traction due to speed and scalability. Understanding fundamentals helps you identify future winners before they explode in value. 7. Risk management: protect your capital. Crypto can multiply your money, but it can also wipe it out if you don't manage risk. Here's how to stay safe. Only invest 5 to 10% of your total portfolio in high-risk coins. Use stop-loss orders when trading. Store large amounts of crypto in hardware wallets, not exchanges. Always keep an emergency fund in stablecoins like USDC or USTD. Remember, in crypto, preserving capital is winning. 8. Stay updated and avoid FOMO. The crypto world moves fast. Prices can soar or crash within hours. That's why staying informed is crucial. Follow reliable crypto news sites, Twitter analysts, and official project updates, but never fall for hype. If everyone's shouting about a next 100 times coin, it's probably already too late. Stick to your plan and remember FOMO, fear of missing out, is the biggest reason investors lose money. Crypto isn't a get-rich-quick game. It's a long-term journey that rewards patience, discipline, and smart strategy. Chodel for long-term growth. Trade wisely if you understand the market. Stake or yield farm for passive income, diversify and DCA to reduce risk. Always research and protect your capital. If you found this helpful, don't forget to like, subscribe, and hit the bell icon for more videos on crypto, finance, and investing wisely. Invest smart, stay patient, and let your crypto work for you. The future of finance is digital, and it's already here.